Welcome to the Everything Apartments podcast. I'm your host, Eric Christopher. I'm president of WSC Realty Advisors here in Long Beach, California, where I've been an apartment broker, owner, and property manager for the last 15 years. This podcast covers all aspects of multifamily investments, from buying and financing properties to the day-to-day operations and management, and then into reinvestment strategies to increase your net worth. We have a great show with a great guest today, so let's get right into it. Out-of-state apartment investing has been a topic that's been gaining a lot of momentum over the last couple of years with California owners. I really saw this in my own career pick up steam after AB 1482 put statewide rent control in place, even after the voters struck it down. Our wonderful state government just went ahead and put it in place anyway. And then I really have seen it's compounded through the COVID conundrum in the way that landlords / owners have been really just sort of victimized by the local and certainly the state government. So places like Arizona, Texas, and even further away, Tennessee and Florida, they're on more investors' radar than ever before. And with Arizona, it definitely represents the most popular destination for California investors, being the closest proximity. There's a sort of comfort zone there. If you listen to Darren Mainstain on episode 4, he's the syndicator that finally kind of picked up chalks and started to invest in Arizona. And he felt that was sort of like a doorway to the rest of the country. But with Arizona, I think we all intuitively kind of put Phoenix right in the middle of that discussion. Almost it's like it's a duplicitous Arizona is Phoenix and vice versa. But the overall growth in that market has been astounding. The apartment market, from all I read and gather, is really blown up over there to the point it's become difficult to find value add plays. I kind of noticed that when I was there in November. It looked like everything I saw had been rehabbed and the cap rates have definitely been compressing. But sitting just about an hour and a half down the road from Phoenix is Tucson, and everybody knows the name, may or may not have been there. But that's a market that could really bring the value to you that maybe you didn't get a hold of in Phoenix. It's definitely an emerging market. And today we have with us Allan Mendelsberg, who's one of the top, if not the very top, apartment broker in the Tucson market with Cushman & Wakefield Picor. That's a firm that's been embedded in Tucson for 35 years. Allan started there in 2011 after starting his career with good old Marcus and Millichap, the big M&M machine. So after graduating U of A, University of Arizona, where my son goes, by the way, started his career with Marcus and Millichap, and it's progressed. And from all I can gather, it's been a wonderful travel. And we'll get a little insight on that today from Allan. Allan's a golfer. I'm a frustrated golfer. He's probably a lot better than me, but in his off time, he likes traveling too. So I think we agree on a few different things. Allan, great to have you with us today. Thanks for being here.
Thank you. Look forward to this.
Yeah, no doubt. So just kind of talking with you a little bit previously and now. So you started in Denver, but the draw was to come out to U of A, and then tell me what drew you there as far as the educational side.
I'm a tennis and golfer, like you mentioned, so I needed to go somewhere where it was hot. So Tucson was a perfect fit for me. I wanted a big sports programs, and the college was just a perfect draw. I planned to get into business, and so it made all the sense for me to head out to Tucson.
Great. Okay, so you're at school in Tucson, having some fun and getting through your classes, and one day something happened and you wound up starting as an intern at M&M. How did that happen?
Well, I was a regional development major, and I needed to find an internship, and so I must have applied at 3 or 4 different places, and the one that kind of accepted me and left me with no other options was Marcus and Millichap. So I worked under one of the top advisors there as, just the guinea pig workhorse for a couple of years. So, I was able to really learn the business and, give a lot of my success towards, that start.
That's awesome. And as we agreed, since we're both Marcus and Millichap alums, great foundational level training there. You're going to learn the market that you're specializing in. They've got the resources and they're going to impress the work ethic on you. So, in my opinion, being traveling over a couple shops over my career, that is an awesome place to start. And so you're there in Tucson, you're doing your internship, you're learning that market. And then after you got done with school, or maybe the internship finalized, you went and got your license, and then you just jumped right in as a broker, huh?
Well, I was contemplating what I was going to do. I was a 3.0 student, so I wasn't getting the best job offers. So I thought I might as well just stay in this world. I have none of my family, or not a lot of even our close friends were in the real estate profession. So led me to stay in Tucson, which I was never expecting to do, and slowly started to build my career. And this is an industry that the longer you stay in one place, the more embedded you are to that community. So
Here.
always was thinking I was going to be moving to another market, but I've made Tucson my home.
Awesome. Great story, great progression. So you've been at it obviously quite a while in the weeds in Tucson, and certainly maybe you could tell us, like, how's that market changed, let's say in the last 5 to 7 years. But over here in Long Beach, LA, and Southern California, we've been in an uptrend since, let's say, 2012 for sure. Pretty parabolic uptrend. Tell me about what you've observed in Tucson apartment market, say over the last 5 to 7 years, on just kind of generally speaking.
We'll kind of go back to towards the beginning of my career. From about 2010 to 2016, Tucson was one of the few markets that did not see significant growth compared to Phoenix and your California markets. It was a market that was just kind of stumbling along, slight progression. We were really not pro growth. We like to be a cowboy town. And, if you wanted to come in here and change who our town was, go to Phoenix, go to Scottsdale. So,
Okay.
we saw very little growth up until, probably 2016, 2017, where we really got focused on bringing employers to the marketplace. And really, that's when we've started to see kind of our kickstart. So, we're seeing a lot of our growth over the last 3-4 years. And, we expect to continue to see that growth compared to a lot of other markets where they shot up quick and now are kind of stabilizing out. But, you mentioned how the markets have changed. When I entered the business, I was kissing every buyer's butt imaginable. This is a business that comes down to supply versus demand. And we had supply through the roof, and demand was very minimal. We were probably at that time 70% local, which fast forward to where we are now, we're probably the reverse of that, where we have demand through the roof and supply is almost non-existent, it seems like these days. And we're probably 95% of our phone calls are people outside of Tucson.
Interesting. And I am hearing that in other markets as well. Mm-hmm. So you said something interesting about how the town in its sort of roots back 10 years ago when you started, was that kind of a locally held philosophy with the people, like, we don't want to be Phoenix, we're a small town? Is that kind of a context that was carried with the government and the people, or was it just the way it was back then?
We have a lot of old political, a lot of politics determine a lot of things, and we had a lot of sentiment against bringing new businesses, changing who we are. When I was in school, you would never be caught downtown. Our downtown was disgusting. There's no other way to put it when we were in school, and that's a big draw to the city. That's a big draw to any major city. So that's what changed kind of, during that time period we talked about, is how do we bring employers? How do we bring excitement? How do we create a buzz? How do we keep the students at U of A in Tucson? This was a time where as soon as I graduated, I graduated in 2009, it was how quick can we get out of Tucson? We didn't have jobs keeping the talent here. And so, you had to create a job like I did, or, work in medical field to really stay here after graduation. So that's where the focus came, is where do we bring the employers in, and how do we keep the talent here in Tucson?
Great. Yeah. And I've read kind of through my analysis that's happened. I've read about, Raytheon being a big employment driver there. I guess maybe Caterpillar wanted to expand their, I guess maybe Western Regional Mining Division or something. So you definitely got some buzz around, hey, it's a great place to locate our business. Maybe, not terribly far from Phoenix if we needed to access that market or whatever. But so you've definitely, sounds like you've all got some traction on bringing employers into that market right about now.
Absolutely. The employers that we were bringing in from that 2010 to 2016 were call centers and distribution centers. So we're only adding, your $10 to $15 an hour jobs to the marketplace, which is hard to grow your rental market. You're very price sensitive when you have employment base that is mainly low to low middle class. And that's the thing with Tucson is, we really have a low income and we have just above a low income. We really struggle with a defined middle class. And then we jump up to a very wealthy class. So, over the last 3-4 years, we have really solidified the middle class. And especially over COVID, when COVID happened, Tucson was a clear winner of COVID. Our population continues to grow from people migrating out of California and coming to Phoenix, coming to Tucson. So you're seeing a lot of excitement, and that's easy to see. Our average single family market has about 5,500 to 6,000 homes on the market at any given time. And right now we're below 1,000. So wow. You can see the supply versus demand. Everything relates to supply versus demand. And right now demand is far, surpassing the supply that we have. And that leads to new construction, that leads to development, that leads to excitement, as I like to say, here in the marketplace.
Yeah, it sounds like all the pieces of the puzzle are lined up for growth. Now, let me ask you this. Over here, we have a huge divide between the affordability factor of your rent vis-a-vis a house payment. We've got a lot of career renters here. Now, over there, what's that like from the affordability standpoint of why wouldn't they just buy a home versus renting? Do you have a high bar there between the two, or is it like, what are your thoughts on that?
We still are very affordable here in Tucson. You can rent a nice 2-bedroom for $900 to $1,000 here. You go into any of the other surrounding markets, Phoenix, that same 2 bedrooms, $1,400 to $1,600. So, we still are very affordable compared to the surrounding markets. What is becoming a trend in our marketplace, and I think it's a trend with any growing market, is, as like I mentioned, the supply is limited, and that includes the apartment units being limited. So you're seeing a lot of the Section 8, your veterans, your different voucher programs starting to get pushed out of different communities. They were used previously to help fill up occupancy, and a lot of owners needed them in their complexes. Now they're getting pushed out. So you're seeing the homeless population start picking up here in Tucson. We need to find housing for the low to low income here. As many investors that are value add buyers, they're not focusing on that. Everybody's focusing on the middle to upper class, but the real growing trend here in Tucson is, what do we do with the growing, low to low, the lower class that's, winding up on the streets or having to, that are really struggling to find housing. And it's tough because, it's hard to build affordable right now, especially with construction costs going up. So I think this is going to be an issue going forward for not just Tucson, for a lot of communities that are growing. You mentioned previously all the different states that are seeing their economies pick up after COVID.
Yeah, absolutely. So supply and demand imbalance, and ever since we've began speaking, maybe end of last summer or fall, you've kind of highlighted that. You've got hyper demand, but not enough inventory to sell these people. That's, I'm sure, still prevailing now.
We're on the market for 5 to 7 days. If you see something on the market here in Tucson that's 2, 3, 4 weeks, red flag.
Something's wrong with it.
There's an issue, and we're also, with as competitive as our market has become on a demand, it's a bidding wars out here. It is tough to get deals. It's tough to find deals. That's the problem that we're seeing, is that we have a lot of owners that love the evaluations we're giving them, but they have nowhere to put their money. So it's a frustrating circle where they don't want to go from a position of power as a seller to a position of weakness as a buyer. So you're seeing a lot of, you're just seeing a very slow moving market of late. I mean, we sold 18 buildings first quarter, and we're scratching and clawing to get 5 or 6 done this quarter. And I think that's going to continue, as for a while, as long as money, as long as interest rates are this cheap and we have this type of demand, it's going to be tough. This is not going to change anytime soon, in my opinion.
So naturally, with that imbalance, your cap rates must be compressing at the same
Correct.
time. What have you seen with that? And maybe like the last 24 months or so, have you noticed cap rates dropping by like 50 basis points, or like what's your?
Even more. I mean, we're at a point in our market where if you bought anything 2-3 years ago, you could have completely screwed the whole thing, the whole property up. You could have torn the place down to the ground and you're still making money. That's just how much our market has grown over the last few years. We're seeing properties that we're trading in the mid to high 6 caps, trading in the now mid to high 5 caps. On a quality building, we're seeing as much as 100 basis point compression. It's an exciting time. This is what I was. I like this. Tucson needs this excitement, because it's been rather dull up until the last 3-4 years here in town.
Okay, so that's a key indicator there. So you're a year ago or so 6.5 cap, and you've slid a point in the year's time just based on supply and demand imbalance. So that's the writing on the wall.
But that's the reason why is because interest rates are in the 3s. I mean, when you're borrowing in the 3s and you're buying something in the 5.5 cap range, you got a 250 basis point spread, on a lot of properties, and that's hitting your cash on cash criteria that a lot of these groups are looking for.
And that's a great point. So with that, what kind of loan terms do you get, say, in the way of LTV over there? Are you able to achieve 75% LTV, or what do you normally see?
I think it all depends on the deal size. Obviously, the smaller the deal, sometimes the tougher it is to get, a lot of leverage. I know, really we got 2, maybe 3 banks locally that are lending on the apartments 2 million and under, and they're 25 to 30% down. So you're still getting relatively attractive. You're able to leverage, and we're seeing 3.75 to 4 on smaller deals, and the bigger you get, we're down in the 2s, on some of the much larger complexes. It's just a very competitive market. Multifamily is a clear winner and a clear segment of the market that's strong and growing in our marketplace. And there's a lot of money out there. Not a lot of deals, but a lot of money out there.
Yeah, I've noticed that over here too, and that's one thing I kind of preach to the clients I have and the people I speak with, is you can affect an arbitrage, because over here, depending on the neighborhood, because we still have, like where I'm at, you could still be a high 3 cap. We're not far from the water here. When you get into a little tougher neighborhood, and you might be able to scratch out a 5 cap.
Yep.
Okay, in a tougher neighborhood. And then on top of that, you're going to be putting down 35 to 40%. The prices have shot up to a point where my lender fella tells me it's not an LTV issue over here. We could go to 75%, but it's the debt coverage. So they're looking at they're about 120 to 125 debt coverage, and that shoots the down payment up to 35, 40. Sometimes on your value add deals that everybody wants and forgets that it takes a heck of a lot bigger down payment. Sometimes you're 50, 60% down on something that's not driving the rents where they should be. So I'm telling people, look, you can, not only can you go over to a place like Tucson, get a now 5.5 cap, you can do it with 25% down.
Yeah.
And that's, that those two things together seem like a really attractive play. Well, obviously many are seeing that as well with your 70% out of area versus the flip side years back. Now,
absolutely. Yeah.
What now, as far as occupancy goes, we here are pretty spoiled because the bank will write 5% vacancy in as a line item. A lot of the buyers will accept 3% in the setups that they're offering on. But I can tell you from my management portfolio, I run about 1% vacancy. Maybe not in a good year, I have 0, right? And that's where we're kind of spoiled here. What is that like over there? Like occupancy and the rent elasticity? How's that been working lately over there?
I mean, this is the strongest, we underwrite properties, nonstop. This is the strongest that the financials have looked. We always underwrite properties to lenders. Lenders are still, no lender will underwrite at a 3% vacancy. So, we're still putting sub-market vacancy factors in 5-6% in a lot of areas. But, management companies we talk to on a daily basis, and they're surprised where they're able to push these rents. Tucson is in a spot where rents are growing, and we're seeing significant rental growth over the last few years. So we expect this to continue. And, I think that the more our population continues to grow with high paying jobs and people coming over here to retire, we're just going to continue to see growth, in the rental market.
Yeah, I tend to agree with you because I was thinking a little bit about this the last time I was driving from Phoenix down to visit. Looking forward in the crystal ball, the next 5 to 7 years, paradigm shifts. What do you see? Is it up and coming sections of town that you go, hey, look, there's a new art gallery and a cool boutique restaurant in this section of town, like I see in Long Beach, where 5 to 7 years ago you wouldn't go there at night.
Yeah.
And so maybe there's a section of town where you go, it's been a little rugged there, but we're seeing the changes to gentrification. Just like the next 5 to 7 years, you got some large companies that are flirting with you guys. How about the overflow from Phoenix? I mean, to me, it seems like you all be a benefactor of people that are maybe in Phoenix or considering moving there, and they go, well, hell, another hour and a half down the road, we can buy more for our money. I mean, or is there like more downtown expansion? I mean, like, what do you see in your crystal ball as the excitement for the next 5 to 7 years?
Yeah, I think Tucson has still a long way to go. We're seeing growth in very specific parts of town, but we're still, our apartment market is still mainly late 50s, 60s, 70s, and 80s built buildings. And so a lot of the excitement and a lot of this buzz has just been renovating these very old buildings to a more modern look now. But everything relates back to jobs, and we still need to land some more high paying jobs. I think you're seeing a lot of that growth happening kind of in the downtown and Mercado area. Mercado's right where Caterpillar located their headquarters. So you're seeing the home prices in that area skyrocket. You're seeing a lot of the buildings looking to go through some major value add. But, central Tucson's fairly developed, and we really don't have, it's, you look at our major east-west streets, your speedways and broadways, and we're still filled with very old retail, very rundown retail, so there's a long way to go still. I see the Broadway expansion, with the roads as being definitely a place where I think you're going to see a lot of growth in Tucson. Kind of heading into downtown along Broadway. They're widening the streets. I think that's going to be a growth center. But most of the growth that has happened is, Tucson's, as I said, fairly developed centrally. Going north, going into Oro Valley and Marana is where you're seeing a lot of the new construction and a lot of excitement planned, because there's land available. Central Tucson, there's just not a lot of land available to do major projects.
Yeah, I did notice that when I was doing my kind of spiraling around the market, getting up there. I can't remember the restaurant we ate at, but it was off the freeway, and I said, "Wow, this you've got some of these really large institutional sprawling new complexes that remind you of something in Orange County, for example." I thought, wow, this definitely looks like where the growth is kind of pushing to the north. We've got the same problem over here, right? I mean, we're basically built out. Infill is all we have, and other than that, if we're building large scale, it's going to be pushing east into the Inland Empire. So it's obviously a different paradigm over there with, hey, we've got the land, and it's just now up to, is the government on board for growth and like putting it that way. But certainly in Long Beach, like, you're always going to have the core city tenant that wants to live like, within a bike ride from their employer or school or whatever. So that I was really interested in that market when I visited. Now you told me that it was like 70% of out of area buyers, and I think
we're more than
share. Okay, so yeah. Is that mostly California at this point?
We have a large contingent from California. I would say we have more Phoenix investors than Tucson investors. We're getting calls from everywhere. I mean, we got several Canadian investors, all over the world, is contacting us. It's definitely, if you read the newspapers and read the magazines, Tucson's one of the fastest growing places in the country.
Yeah, no doubt. Yeah.
And you don't know how many, we get a call where it's, hey, I read this, I read Tucson's growing. Tell me about the market. I want to move money there. It's a very exciting time for us, and it's definitely no longer the redheaded stepchild to Phoenix. We are definitely on the map, and we're here to stay.
Great. So with the California folks that you work with, and I don't know if you're necessarily representing them, if you have a profile, I don't know if the main driver, if you interviewed somebody that came into Phoenix or came into Tucson, is it the California government overreach, or are they just value hunting? I mean, you ever have a read on the profile of these people coming from our state and what their main motivation really is?
A lot of frustration politically, a lot of frustration, with, rent control, cap rates don't make sense. There's just been a lot of, it's mainly they're fed up, and their dollar goes a lot further here in Tucson. You're able to actually buy deals that make sense in our market, as opposed to buying deals on hopeful appreciation and land value. We still value close to actuals. We are a growing market, and most of the California investors that we're seeing of late are looking, exchange buyers that are looking to tie up cash, and they don't want a 3 cap in LA. They'd rather get a 5.5 cap in a growing market here in Tucson.
Heck yeah. I mean, the rings on our tree here, I grew up here and has kind of researched the history of the local real estate, and it goes even back to my grandparents, where like post World War II, you could literally buy something here, and even if you bought at the top of the market, you may not be able to turn it for a profit immediately, but it's always been a no-brainer that you would succeed here. And what I'm kind of preaching to investors is like, hey, are we going to see that kind of appreciation here in the future with all this added weight on our shoulders around rent control, around taxes, fees, just government involvement, restrictions? Like, are we really going to continue the same trend that we've had for decades here? I don't mean to be a pessimist, but I can't see it happening. Our state needs so much money. They're so far in the hole that they're going to have to shake somebody down for it. And why wouldn't it be the rich top hat wearing cigar smoking apartment owners, right?
Well, it's funny because we have several owners that lived in California. I was golfing with one of them yesterday that lived in California, escaping here to Phoenix and Tucson to live. It's, I think you're seeing definitely, a lot of the frustration that you just mentioned, that's what they're mentioning to us. And I think that, our market, and that's a main reason why our market is growing as fast as it is. It's because of the California investors coming in here that are willing to pay more money. It's when I first started the business, we didn't have this big California influence like we do now, where the two local investors were able to actually pick up deals. Now, the pockets are nowhere near, what they are out of state and even in Phoenix as they are in Tucson. So, as our deals are hitting, closing, it's not a lot of 520 phone numbers that are buying these. We're way more out of state in California and Phoenix, and outside the market investors.
Gotcha. So I am lucky enough, finally, let's say I 1031 exchange, I find the right property in Tucson. What are the biggest challenges facing owners, like especially like a new owner that's coming in from California? I mean, what would be something that maybe an owner, like if it were me, I'd say, oh, wow, I didn't see that coming. Are there nuances there that like somebody that would be from here trying to invest over there would, hey, this and this and this are different, you should pay attention to? Like any insight on that?
I think it's just understanding who our market is and what Tucson is. We are still, like I mentioned, even with all this growth, we still are predominantly a paycheck to paycheck tenant base. So there's only very few parts of town where it makes sense to do an extremely high-end renovation. You get a lot of owners that are putting way too much into the buildings, hoping to raise their rents, $400, in a very price sensitive market. We are capped in a lot of Tucson of what you can get for rent for a 1 and a 2 bedroom. And if you're not building a product to fit in line with what the submarket is, you're seeing a lot of people putting in a lot of money and only getting a very small, $100 kick. When you put in 20 something $1,000 a unit, that's not a good return on your investment. So you gotta really understand the market. You gotta know, what level of renovation you're going to do. And this is the struggle for a lot of California guys, is they come to us and they say, hey, I'm looking at an $800 2-bedroom in Tucson. This same 2 bedrooms, 1,1800 in my market. So it should be easy to get $1,200-1,300 for this in Tucson. And you can't,
right,
unless you're in very select areas of town.
Now that's a great point, because I've seen people do that over here. It's a little more compacted, where you get into certain neighborhoods, and just like you're saying, whether it's Tucson or here, you got to build to the neighborhood. And if you're hopeful that you're on a cusp of a gentrifying area, or you can smell that growth kind of brewing around you, great, knock it out of the park, and those rents will follow. But in certain neighborhoods, you get up into North Long Beach, like that's kind of our tough area of Long Beach. 1/3 of our town is really cool, sort of beachfront city scape downtown. And that's pretty easy to justify a higher level investment. But I've seen guys that are like up in the north part of town, and just like you're sharing, it's like, I think you might have overbuilt these units for what you're really going to get on the rents. So that's a really good point, is when you're going into a completely foreign market that you don't understand anywhere near that you do here.
I think that's why we're successful. I mean, when we do so much business here, is we're very honest. We want to build the right team around you for the right property. And so that's important, that exactly, I'm going into this market or this sub market. This is what I can do. These are my comps. We focus on helping investors understand the market that they're going into, so they don't make mistakes.
Yeah, just put all the gears in motion based on the scenario that you've got to help those buyers. And that's really wonderful, because you're dealing with enough of these people, the majority, in fact, that are probably more like that than they are seasoned Tucson investors at this point. And they definitely need that, right? You show them one winning equation, and if they've got the capital, why wouldn't they repeat?
Yeah.
So it sounds like, hey, great market, everything's going the right way, but good luck trying to find a deal right about now.
Without a question. It's
Gotcha.
tough. And it's tough for us. I mean, we're as aggressive, hungry people as you can get, and we're begging and scratching and clawing just to get something, something to show. That's just a sign of the extreme opposites we are with supply and demand. It's just, it's a struggle, and you're seeing just, and we got guys that are coming in with crazy offers, but I don't want to take the tax hit. I have nowhere to place my money. We don't, that's what we're trying to think of, is, how can we solve that problem when there's no supply? And we just haven't come up with an answer yet.
Interesting. Well, let's leave it there. Really appreciate you being here. And folks, I'm going to put Allan's contact information in the show notes. If you got further curiosity about Tucson, I'm pretty sure he'd love to share more insight with you if you're kind of considering a move out of state, and this might be a candidate. Again, it's pretty tough supply demand, but deals will always get done in some form fashion. So that'll be there for you. I appreciate you being here again, Allan, and stay tuned for the next episode of Everything Apartments podcast. We're going to touch on some property management best practices in the way of how to lease units a little better, a little faster. And there's a couple tricks that I may be able to show you that maybe you weren't using before. So again, Allan, thanks again for being here. And everybody, thank you for listening. And we'll talk to you on the next episode of Everything Apartments podcast. I'm Eric Christopher.